Today's edition of Toggle's Daily Video Insights. For those of you joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle. And in this video, we're going to take a deeper dive into one of the insights that Toggle has generated. There are usually hundreds of them generated across thousands of US equities. And the intention really is to highlight where there have been some changes in fundamental data that could portend upward or downward pressures for a particular stock price. Now, if you'd like to see more of these, subscribe to our YouTube channel. You can also check out and try Toggle for yourself by going to toggle.global. Either way, in this video, we're going to show you how to use it and how it might potentially supercharge your own investment process. The focus today is going to be on a company that needs no introduction, which is Apple. As you can see, Toggle has had a number of positive pressures highlighting that there is definitely still a bull market going on in this particular stock. Most recently, however, it's highlighted that there has been a strong consensus among analysts that Apple's fundamentals are improving, and in the past this has proved to be quite bullish. In fact, with the starting point of 132.54, within the next 3 months, the stock could rise as high as 150.95, potentially even overshoot that level. And so long as you're staying within this confidence interval, you can see that this could happen well before the 3-month period is over. Now, at the same time, of course, important to respect that the red line, meaning if you were to deviate meaningfully from this confidence interval, in other words, if behavior of the price action is meaningfully different than how the stock had reacted in the past in response to similarly bullish consensus, the time would be to reassess the position and possibly place your stop loss somewhere around here. Now, why might it move? As we already mentioned, the sense is that the analyst consensus is improving. The percentage of positive earnings revisions by analysts has risen, and so whenever that has happened in the past, the stock has typically risen as well. And we can take a look specifically at how many past occasions. There have been 10 other occasions where we've had this sort of bullish revisions, and subsequently the stock rose almost 14% within that 3-month window. Now, looking at the past performance, you can also see the actual outcomes, the actual returns from those past episodes, and you can see that the concentration, of course, is near 15%, but there have been a few cases where it was quite substantially higher, and more importantly, the downside risk seems to be relatively concentrated and contained relative to the upside. So you're easily looking at a 4-to-1 or 5-to-1 type risk reward, which is exactly the sort of one-sided risk that we try to highlight when we show you some of these insights. So much for Apple today in the daily brief, which by now should already be in your mailboxes if you subscribe to it. If you don't, you can do so at toggle.global. We also discuss and try to take a deeper look at what's going on with crude oil prices recently. So hopefully you'll enjoy it, and if you have any comments, they're always welcome. Thank you very much for your attention, and we'll see you again on Monday.